Alrighty. Good morning. Oh, there we are. Good morning, good morning, good morning. Let's see what's going on here this morning. Doc from North America. Good morning, good afternoon, and good evening. Let's see what we have. Oh, there's my voice. No commercial. That was interesting. All right. What do we got going here? Oh, there it is. Let's get J4X up there so we can figure out what we're looking at. What's that? New Zealand there. Let's go over and take a look at Euro. Euro's just sloping sideways up a little bit. We got red dots. Nothing really major going on there. Let's see what J4X tells us this morning. Still waiting for J4X. I'm a little lost when I don't have the J4X. We'll get that up there and it'll be clear. I see that it looks like we're up from Friday. So TGIM, thank God it's Monday. But we're not really seeing any real action here at the moment. They had knocked down, I guess, it was triple expiration on Friday. So what happened was it got really, really wild. And they knocked, I guess after the market closed, after the stock market closed itself, 4 o'clock Eastern Standard Time, then they knocked down the stock indices, and they knocked them down big. And then what they did is they knocked them down even bigger yesterday afternoon when they started trading in the evening hours. And then what happened was from there, they roared them back up like about 700-800 points. And it just looks like all expiration type of action. No, it's there's no driving force behind it when it comes to. And let me stop myself right there. When I say driving force, like we used to call it conviction. I don't think there's any real conviction to sell. Like, I need to liquidate this particular product, get it out of my portfolio. It's more of I need to sell this against my derivative. I don't really care what price I get. I need to sell this against my derivative. And that's a big difference between a derivative, when you're selling a lot of value, or even buying a lot of value of equity, stocks and so forth, and you're doing it mainly for literally to hedge your derivatives, and it has nothing to do with, is the company going to be in business a year from now, or are they going to be one of the top businesses in that field a year from now or 2 years from now, or are they having really great sales, or are they having really bad sales? The selling nowadays does not really look at the fundamentals. It's all based off of the derivative, and the disconnect and the volatility in our marketplace is because money managers are still dealing with the idea that they need to function like a fundamental, and they don't have much of a choice. They incorporated their funds, and people gave them money with that sole perspective is that they were going to use fundamentals, and they were going to use concepts that have been going on for like 150 years, and it was it was a good way of doing it then, and so it must be a good way of doing it now, that type of thing. And so and that's really where we are. So it really makes things a little odd, a lot odd, I guess you could say, is because it doesn't really match the idea of the Dow going up and down 1,000 points or 2,000 points in a day, is not part of the norm realm. It is definitely a panic thing, and it's not exactly like, okay, we need to liquidate. I saw somebody today, one of these old guys that's even older than me, say something about, the talking head said, so you really hated the stock, you didn't like the stock market 2 months ago when it was 35% lower. So you must now see it as really overvalued, and and you don't want to buy any positions on this at all. And his answer was, well, I've kind of changed my mind now that the Federal Reserve, like we didn't know the Federal Reserve was involved 2 months ago. I'm a little confused how somebody that's been in the business for 35, 45 years or 50 years and doesn't realize that 2 months ago when the Federal Reserve said that they were going to do anything and everything they could to keep this market stable, that all of a sudden now that it's up 35%, he realizes that hey, maybe the Federal Reserve was serious about that. It's like, yeah, guess what? They're always serious about it. So, um, what we're seeing here now is that type of action. Now, when we look at the currencies, we're really seeing somewhat of the same characteristic, and I don't know if I totally understand how that functions. Besides them trying to keep a stable, in other words, they measure what they refer to. I don't even know how they, with a straight face, they can say this, but they measure what they call currency manipulation. I can't even say it being serious at this point. But they claim that they're actually able to measure currency manipulation. The U.S. Treasury and the Federal Reserve can actually measure, currency translation, currency manipulation. Now, I'm not sure exactly what that means. Hey, Janos, how you doing? What is it? He is doing an interview with a purpose. He might not lie to push other markets participants in the way that serves him. What's this? Oh, you mean hey, Titus, how you doing? You mean like the pal? Is that what you're saying? He's doing an interview with a purpose. He might lie to push the other market participants in a way that serves him. Yeah, talk his book, in other words. Oh, you're talking about the money manager. Nah, I turned him off after he said, yeah, I now realize fighting, the Fed is going to. When he said, when I realize now that the Fed is going to, I turned it off. I couldn't take it. Right there alone. It said to me, don't pay attention to this fool. That's so. Yeah, I mean, what he's doing an interview with a purpose. Yeah, I agree with you. And he might lie to push other markets participants. More like, I'm going to be soft and not call it lie, but it's the same concept. And that is, he's saying this stuff so the money that's in his fund doesn't run away. I would go with that. And it definitely serves him. Oh no! If you saw this guy's face or heard his voice, you might recognize it. He's on the financial networks now for decades. I forget the name of the fund he's running. I stopped paying attention to it because I got sick. That such a moronic statement, right from the beginning. So, that's pretty much where my head is at about the whole thing. Is that the way we're looking at these markets is really challenging. That's why we use our algorithm, and and the fundamentals have kind of left the building. They're not really around anymore, as you know. And you've done that. You created that how to trade the webinar video, and even that has distorted itself even more now to the point where you don't even like that video you created. And I say make a better one. I think you can just lay out who is benefiting from the fundamentals, and it's mainly the money managers who are getting paid to money manage money in a very poor way, and something of that nature. You could look at the strong ones versus the weak ones, or the quantitative ones that are making a heck of a lot more money than the money managers of fundamentals. But anyway, that's where we are. And so when we look at these things here, we see the currencies. When you look at J4X, we'll make it really big for a moment. You can see overall, they are really in a very mild range, and spread out over, many, a couple of years. You can see that they're not really going anywhere anymore. And the objective really is by the central banks is to keep them as calm and as consistent, and keep them away from being I guess the best word is volatile, enormously volatile. It's kind of funny how do we describe that versus say a Turkish lira, who's really rocketing itself all over the place. Let me just show you the Turkish lira again, right there. It has gotten very docile at the moment, but and then cable we understand because it's been one major confusion. You can see, look at the Turkish lira's action. I mean that's what's that, a 15%, 20% move? And I guess, is that far? A 15% move on the euro would be, say, 99, 97 on the downside, and what would it be on the upside? It'd be like 125, 130. See, it's at 112, so at least 117, 118. And then when we go back to the euro, are we really seeing that much of a difference compared to the way the Turkish lira has been now for the X amount of months? It bounced. Look at it, even at that wild move. That was a 9, that was a 9 handle move, but then that was in the middle of the crazy to begin with. So, all right, so let's get moving along. Let's get the fact check sheet up there, and we'll talk about the quant. And we'll look at the J4X and see where we are this week versus last. And you can see there with our work, we're in daily sells here with the euro. You can see the weeklies are in a buy, so we're stuck in a neutral stance, kind of like a summer thing, I guess. And you can see it here, 5 weeks in a buy, and what's that, 4 days in a sell. So the fact check sheet basically is saying be neutral at the moment. And you can see here on J4X, it's buried itself down at the lows, and it's still not, it's still not doing any real big action, just kind of a lot of sideways action there. And so we'll just take it from there. Let me think, what else can we say about that? I don't really have much more to say about that. The only thing I can say is that I don't see any real conviction in the market across the board, except for the fact that they're still trying to understand how to deal with the Fed and what the Fed is doing. I think that's and that's really what it comes down to. And then every so often you get these, drastic moves, like Friday from the expiration, which was incredibly wild on the upside, and then incredibly wild on the downside. And all they are is feeding their derivative position. In other words, they've got to hedge it. And that's it. All right, now let's take a look at cable. And we'll go right there. There it is right there in cable. You can see it's perking its little head up a little bit. But you can see the lines are all down towards the bottom of the range. So maybe we'll start to lift up again. Maybe. Let's see what the quant is doing. So, what's up, Titus? What is your weekly buy on the euro? Let's find it. Let's go find the weekly buy on the euro. Let me go over to the other machine. Where is that at? That's okay. Let's minimize that. No, wait a minute. It's in a weekly buy. You're looking for a weekly sell. That's what you're looking for. So we need to find a weekly sell number there, because we've been in a weekly buy now for 5 weeks. It hasn't been exactly. Let's go back to that real quick since you're looking at it. Right there. Yeah, so you can see over the last 5 weeks it's been going up, but this last week and a half it's been falling down, and that's why we're in a daily sell for the whole week of last week. And let's see, here we go. We're connecting up the other machine. I've been going in too many directions. Let's see. Let's see. I need that. I need desk. That's it. There we go. There we go. And let's see. And there we are. Okay. And one more thing I have to turn on. I didn't turn it on today. I was doing too many things. Let's see. All right. Let's see. There's Dookie Week. Let's try that. There we are. Okay. And the weekly number for euro is, well, it's got a little work to do. We're looking at what is that? 110.98. 110.98 is the weekly sell number there. We got close last week. We went down towards it and then stopped. Let's put that in there. 110.98. Where is that at? There it is. Let's put that in there. 110.98. That's the weekly sell number there. Now, I'm not sure if we're going to see much action. I don't think there's any real news out there this week. This is like one of the slowest. I guess this is like the slowest part of the month. Do we have CPI this week? We might have CPI this week. I think CPI was last week. Maybe we have PPI this week. So 110.98 is the weekly sell. There we are. Let's move that up like so. And bring that up. There we are. Let's see. What is your weekly buy? Yes, I see. 110 pips to go. Yeah, I'm not really sure if they have a lot of conviction in this market. We are in a weekly buy and a daily sell. So let's see if they try to drive this thing to the weekly sell. Now you can see here it's up a little bit today. We've been watching some really strange action over the last 3 months, and I'm not totally convinced that any of this. I've said this in the beginning of a lot of these webinars over the last 3 and 4 months, to try not to take these moves too serious and don't build a position on any one of them, because I don't really believe that is the true nature of the product. In other words, there's times where something's undervalued, and there's a hope in the future that they're going to have value to it, and so people buy that product, whatever it is, be it the Euro, the cable, or Apple computer, whatever it is. Okay, yeah, no big news. Now, when you look at the way these things have been trading of late, they're more moving because of the algorithms, or not algorithms, but the derivative positions themselves, not the algorithms. They're moving around because of the derivative positions needing to be hedged. And so that's really the crust of it all. That really is. And so we're not really seeing a real clean direction. We're just seeing this big sideways chop in a lot of these currencies. You can play the range with them instead, I guess. And following our algorithm, it makes it a lot easier, that's for sure. So right now, whereas we were at the top of the range, we can't get into the weekly sell yet. We missed it last week, and maybe we'll go after it this week. We'll see. But instead, we are, we're seeing ourselves some firmness in here. And you can see on the J4X that the product is down at the bottom end of the range. And so, we're really looking at this, and it's saying, well, maybe that these products are trying to go up in value now, and it's at the bottom of the range. We'll see. If we get into a daily buy with a weekly buy, there's a good chance we start to see some movement back up again. But are we going to really see, explosive movement, or are we going to just see some lazy kind of just firm buyers? I say lazy firm buyers. That's about it. Enough for the day trading, but long time trading but the long time trading difficulty. What do you mean by that, Titus? The long time. You mean, in other words, where are we going to be in 6 months? We follow things week to week. That's the way we follow everything. And it reconfirms it again that it's going to stay, because everything has free will and there's variables. And so to try to say that if something's going to be there in 10 months from now, anything's possible. I mean, there could be a change of policy in government and change the whole ramification. And then it wouldn't make as much sense. Hey, 54, because of the big QEs they are issuing. Right, exactly. One thing is for sure, they're issuing them to keep everything firm and steady. And the only time that things get nuts is when the derivative people come in, that they've put themselves in a position where they have to unwind. And when they unwind, it opens the doorway for, I guess, the older value investors to try to buy something cheap. And I'm sure the central bank lets that happen. In other words, they support that calamity, I guess you could call it. I'm not even sure what to call it anymore. But that is the way it all works nowadays. and the only way we follow it is through a quantitative way, because it's the most accurate way to follow anything, because the fundamentals are being abused. I would have to say, if you want to describe fundamentals nowadays, you'd have to consider them like abused, that they don't really they're not really representative of the physical realities. I mean, there are companies out there trading at twice the value they should be, or something like that, or 40% of the value they should be, that type of thing. And the currencies are the same way. I mean, really, is Europe really growing? How many times has 54 said, this baby's got to go below par, below 100? This thing is, the policies are wrong. The growth is not there. The GDP is not there. The laws to allow new commerce to grow and more employees is not there. I mean, all those fundamentals are very clear in our face, but it doesn't seem to have any real effect with the underlying price of the product itself. They seem to sell it down a little bit, and all of a sudden buyers come back in again, and it's just the central banks trying to keep these things in line. So that's why we follow things by a week-to-week basis, and we follow the daily trends to see if the week is going, and you have it like right here. We have a couple of good examples on the spreadsheet. 10 weeks in Euro AUD on the downside right there. See if we can do that right there. We have 11 weeks with the Nasdaq and the and the S&P is just 1 week. It flipped into sell. Same thing with the DAX. 11 weeks in a buy. We have 11 weeks of the ruble in a sell. There's a couple of 10 weekers. Copper, 10 weeks in a sell. Aussie spot, 10 weeks in a sell. Crude oil, 7 weeks in a buy. 17 days in a buy. That's something we should go look at really quick. Perfect example of it all. I'm old enough to remember the days when economic expansion used to happen without QEs. Exactly. They say that something like 1/3 of Wall Street has never really seen that now. People who are running, trading Wall Street, they've been in there 12, 14, 15 years now, and they don't really know anything but government intervention. We used to complain about the New York specialists and the institutions. They used to be the entity we would blame. Now it's the Federal Reserves and the central banks across the planet. But it's not the worst thing in the world. It's just the way it is now. That's all. Will it change? I'm sure it will. For the better, I think so. So, we're just trying to figure this out and get it rolling. I mean, that's really what it is. I don't really to us, we've been doing quantitative analysis for so many decades now that to me, the fundamentals, even when the fundamentals were accurate on some level, they're not accurate as much anymore because of that. They're short-lived. They don't establish weekly and monthly trends anymore. They establish hourly trends and literally 5-minute trends. That's what they do with the same fundamental numbers that we used to follow that had validity for months and quarters of a year. Now it's the other way around. They have almost no real validity whatsoever, which is really crazy. But the institutions are invested in them, and they don't have a choice. So, all right. I hope I answered your question there, Titus. And let's go over to where was I? I was looking at cable, right? Let's go back to cable. There it is, right there. And then you can see it's firming too, and then you can see the lines on J4X have been buried in here. So they're way down. And let's see. Let's zip over to the Chicago Quant. And do I have it up there? That's Euro. Right there. And it's trying to turn, but you can see it's fighting. It's also fighting not to get to the daily buy today either. Lots of red dots there. Lots of selling pressure. All right. But trapped in the buy. So let's go and take a look at the Turkish lira. I was really surprised. They really had that look like they were going to take it down. Maybe Aragon was going to do something that made put confidence into the product, but then it seemed to stall out. So, I mean, that's where we're at the moment here. Let's see, and let me into. There we go. Let's put 2. I'm texting there. There we are. So, the Turkish lira, as you can see there, and let's look at it on J4X. Right there. Wow. I guess we're going into the summer months, and I'm not really sure if we're going to see anything that would, push us. When you really think about the longer term view, as Titus was saying, what is out there really for the longer term view at this point? I mean, I guess there's something. Let's see, what is it? Europe has a minus 3.5 GDP growth. Yeah, and the currency is doing just fine. You just scratch your head, don't you? I do. In my humble opinion, they need a 0.85 euro to the. Oh no, I hear you. But are we going to see that? I don't know. Brussels, remember, they have all that money lent and borrowed and all that stuff. That's what really keeps all that kind of locked in, I'm right there with you. I agree. You would think that the euro should be like 80, 79, 85, 92, something like that, but they're not going to let it get there. And every day that they don't, in other words, they don't allow it to get there, it tells us how much control the central banks have over everything, every currency pair, every stock indice, over the bond markets. That's just like living proof how much that they control. That's what that really is. So, see, Titus says that Aragon can give some confidence in his currency. I don't know. We keep on looking for it, but it doesn't seem to come. That's the whole thing there. Wow, what is that? War and Peace. Let's just do that. Oh, what's that? That was a tick there. So that is where we're at. Let me see now who did the tick. There we are. So where we are now, yeah. I mean, it's what is that? That's like line 17, 29 weeks now. I mean, are we going to see a whole year? What are we going to do? I mean, how long is this going to go on for? I mean, is it going to take the path I keep on suggesting, that it's going to go up into the teens? It's going to start looking like the ruble and the was it the South African rand? I mean, are we going to see that out of a semi-industrial nation? Why don't they allow the euro to go down? Because of all the money that they borrowed and lent and all that stuff. In other words, they if they let it go down, doesn't that force them to pay an interest payment, right? I mean, right now they don't pay interest, do they? They charge interest. So you buy a European bond right now, and at the same time, the European government doesn't pay interest on it. They get paid interest, basically, right? If they drive the currency down, doesn't that distort the bond? So in other words, it makes it cheaper. And I'm just trying to guess. Let's see. If the euro goes down, it takes the bond value down, right? Because remember, they're not denominated in euros. So you're selling bonds, and you put a 15%. Let's say they took it down to 85. What would that be? That'd be like a 27% drop. Is that what that would be? Would that be a 27% drop? 24% drop, something like that, right? And so that would drop their assets down. hence the same reason as China doesn't let their currency float at all. At least the Europeans let their currency float. I mean, they may control it or use that hideous word manipulate, but the if they allowed their currency to drop, then their bonds drop in value and they lose money, right? The government does. So that wouldn't work out at all because it's priced in euros. So you see that one? That's what they're doing there. One day, and let's see. So one day, Doc. Let's see. Why don't they say one day, Doc? And please remember me then. ECB will own most of the banks in Europe. If they don't already, that's really the that's the $20 question, really. Don't they? They may control almost all of them. You know, I mean, how many are really independent? I mean, look at it in the United States. How many of the big banks in the United States are really even exist anymore when you really think about it? You know, it's so no. I mean, I think we're already there. I just don't think we realize it. So Titus says, but it's like shooting yourself in the foot on the long term. Yes, it is. That's what politicians normally do, don't they? They deal with short-term. Let's see. They deal with short-term, long-term problems with short-term remedies so that they get reelected. That's pretty much the way it usually works. Especially the socialists, whereas the capitalists usually go back to work, you know, because they go to politics for a short period of time, decide that there's more value and money in private enterprise, and they go there instead. But the socialists, they're happy to be in government forever. They care for their term in office, not long term. Yeah, they don't. I'll go with Janos in the way he's trying to describe that. They care for their term in office, and not for the long term, and not the long term in the office. Long term and like they figure that, well, I'll be out of office in 15 years, so who cares in 16 years if there's a major problem? I won't be there. I saw Barney Frank, the congressman that you could actually identify as the person who helped to create the collapse in 2008. Okay, I saw him on CNBC. He was crying. He said he thought he had been doing the right things all these years, and he realized that it was wrong. He was totally distraught. And after the Federal Reserve came in and propped up the market over those couple of weeks, he was nowhere to be found again about talking about it, and you can't find the YouTube on it anymore either. And that's that. And now when he talks about it, he talks like as if he was brilliant and knew what he was doing, you know. But when the panic was hitting, he was totally distraught and literally crying on TV. One could care for 8 years, other care for the whole lifetime. Yeah, right, exactly. And that's why the constitutionalists, the conservatives, the capitalists go into office, and after a while they get out of office because the stink is too high, and they realize that they'd be better off. They can't help they try to help, and it doesn't work, and they go back to business. They do their business thing, and they just shake their heads the rest of their lives. And whereas the socialists, matter of fact, I put something up on my Facebook, and let me go find it. I could literally put this on the web. I think I can put this on the website. I am actually going to try to put this on the website so you can see this. It is amazing. I mean, it is the classic reality to all the problems, and no one is ever willing to accept those realities except for the people that they think are bad are really good. You know, the constitutionalists, the capitalists, they get in government, they try to fix things, and they leave and go back to work again. Then the socialists, like in the United States, the Democrat Party, the average Democrat in the House of Representatives is some crazy number. It's like 63 or 64 years old. You know, it's like the party of old white people. Okay, and then you look at the Republican Party, and the average age is something like 38 or something like that. And you would think, oh wow, that must be the progressives. And it's like, no, those people know that they go to government to try to help. They get fed up with trying to help, and then they go back to business because they realize that it's that the left is just never going to let go. They're going to perpetually abuse society, and then blame everybody else. And I saw this thing. I posted it. It shows the ages of them, and you just shake your head. I mean, you just shake your head. It's like, oh my God, are they, how doesn't anybody realize they're that old? And it's like, they do realize that they're that old, and they don't. And the media, they own the media now, and since they own the media, it doesn't really matter. The media will just pretend that the opposition is part of the issue. And so I just want to show you their ages, and it's like, oh my God, this is insane. And that's I have to find my password for it, and then and that's really where we're at. It's that disgusting. For a 2-week trial. Oh, okay. Robin's talking about the quant side. Cool, very cool. Oh, Robin, guess who I heard from in the last hour? Yes, the clerk. She thinks she has COVID-19 now. She's been resting for a week. That's what it's all about. So, let's see. That's what that's been all about. Surprise, surprise, huh? Let's see. I'm trying to find my password because you have to see these numbers. These numbers are like, are you kidding me? When you see the numbers, you're going to be like, what are these people, why does the Americans vote for these guys? Well, they really don't. But, the Americans don't really vote. Life is so good here that we rarely vote. Only like 40-50% vote. The rest of the people just like say, oh, to hell with this. I don't care. So, let's see. I'm just trying to find my password. I think that's it. Let's try putting that in there. Let's see if that does it. Let's see if it logs me in. It has. Okay. All right. Here. Now, wait till I bring this picture down on the screen. You're just going to be like, are you kidding me? Where do you see their ages? Okay. There we are. As it spins away here. I'm going to minimize that too. Anything to cut down on bandwidth. And let's see. Here it is. Let's see. As I scroll, it's still thinking. It's still doing its thing there. But this is the same problem probably in the European Union. I'm sure that their leadership is old, and everybody votes for them because they think that they're nice. And there it is, right there. There we go. Look at that. All right, so Dianne Feinstein's been in there for 60 years. Schumer for 45. Maxine Waters for 47. Leahy, 54. Biden, 51. And she's a young one. She's 80 years old, and she's been in there 33 years. So, and then they say, and then Trump's been in there for 3 years and has gotten more done than them, and resolved lots of problems. And he's the idiot. He's the one that's the bad guy. So that is where we're at. And so that's what's probably happening with the European Union. I'm sure if I actually looked at the ministers that run the whole place, I'm sure they're in their late 70s, they're in their 80s, maybe even, who knows, 90s, and they're probably taking them, and no one deals with it. Let's see. Yano says one could care for 8 years. Yeah, see, exactly. See, Yana says, well, there are a lot of reasons to vote for someone in the EU. Yeah, to get rid of them, I'd imagine. I just vote for the ones that appear not to be the biggest. I hear you, Giannis. I'm not going to use the word, but I agree with you. I mean, yeah. I mean, that's really what it comes down to. Me, I like the I like to vote for people that actually know what they're doing. That's why I didn't vote for the last two Republican presidential candidates, and I didn't vote. I voted for the Libertarian. I knew that they were going to lose the races, and I knew that they were going to screw up anyway. A big part are rather young. Probably the conservatives, right? The business people that have gone in there to try to straighten things out. How about the leadership that's in charge right now? Like that woman they put as head of the ECU, right? Isn't she like, just your classic socialist? I read that. And no one even knows her name. I mean, do you know her name? I just know it's a woman at this point. I remember seeing the name, but yeah, see, that's it. You know the Lafayette one, and you don't even know the one that's in charge of the whole place. It's just that crazy. Yeah, she's a chatty Cathy on some level today. I'm getting texts left and right from her, Robin. So I don't know if she's going to save data or not. Is that her name? Ursula von der Leyen. Yeah, Junkert. He's a clown too. He's a drunk. Yeah. They say that the speaker, what's her name? She's supposedly she's a fall down too at the same time. Fall down drunk. Oh wait, he still is. Yeah. I hear you. All right, let's move along in some of these other currencies. But yeah, that's why 54 is right and why it's not happening at the same time. In other words, 54 is probably saying, "Damn it, I know I'm right." And guess what? You are right. But the problem is it's not going to change until like here in the States, we brought Trump in to change it, and he did. He's gotten more done in 3 years than some of these politicians have done in all of a lifetime. Oil rebounded. Do you have any view on that? Yeah, let's take a look at oil. Let's jump over to there. Because where's that spreadsheet again? There's a spreadsheet right there. I mean, look at that on oil, line 5. 7 weeks in a buy, but 3 full weeks and a few days. So 17 days in a buy. And let's put it up on J4X. And then right there. You know what, Robin? We should do oil. We should throw oil into the that on Wednesday or something like that. Look at that. It's just been climbing, and now it's going up and down with the lines, and held itself pretty well. But those lines are only so good. I mean, they're better than nothing, and Docs is obviously the best of all. But you can see here, J4X is doing it again. It's bouncing back up just like it did here with our work. You can see where ours go underneath, and we get into cells and all that stuff. Now that's Turkish lira. Sorry about that. Let's go to the actual subject matter. Right there. All right. So there. Let's see. Right there. July. As you can see there, we've been green dots for a while. We've been in a daily buy from here. And I think we've been in a weekly buy just a little bit further back. Right? Where's the... Oh, we don't even have the little green line in there. But it's been 7 weeks back. It's been somewhere around down at this low. So this is one... I guess it's 1, 2, 3, 4, 5, 6, 7. So we've been in a weekly buy since back there. Let me see if I can find the line for it. Since back in here. What's up with that? There it is. And just make it green like that. There we are. And then you can see we've had, to a great extent, we've had some red dots, but the lines were plus at the time, so it couldn't get them into the cell. Or maybe it did. Maybe this is where it... 2, 4, yeah, 6, 8, 10. Yeah, so the last buy is here, right after the red dot. And it's been just climbing. Let's see. Titus says oil rebound. Do I have a view on it? I was looking for when it was down minus 40. I was looking for what 30. I said I thought we'd see 33 again. So we got to 33. It's at 39 now. I thought that the top end of the range was basically right here at 39, 38 and a half, 39. I thought that outlandishly they might try to go after the 40s, like 41 or so, and they did. I would imagine that it's going to play the 30s. That's the way I see it. And then if they see any real economic excitement is going on, then I guess I guess that's where we're going to be. In other words, it'll climb. If they see industrial growth, I don't. Yeah, so I would say that that's probably what we're looking at. The idea is to wait and see if we see more economic growth, if they calm down. So we'll just go from there, really. Just figure the 30s, I would think. It would take. They're not going to shut the economy down again. So I'd imagine the worst case scenario is they go down into the low 30s. And I'd imagine that, what else can we surmise from what I know the policies are going to be? If things start to perk up, like Trump, let's put it this way. After the election, oh, shoot. I forgot to do that work for you over the weekend with the Father's Day and all. I'm sorry about that. Let's see. Titus says it's a problem when you have better life being a politician than being a company leader. Right, exactly. Right, I agree. And you don't need the starting capital. Yeah, right. Giannis is right about that. Just got a high education and get into political party. And I would say go to the left. You can do almost anything if you belong to the left. You go to bed at night knowing that you're not following any real values. But if you run for politics, you run on the left. You're going to be able to. You could make a whole career out of it. Whereas on the right, you're just going to get fed up because you're going to be like, this is stupid stuff. I can't do this anymore. Yeah. So I mean, that's really where we're at. I guess that's the way it rolls. Let's see, what else can we say about that? I don't really have much more to say about that. I think it's just going to be, the election. That's what made me remember. After the election, the oil may really take off even more from there. I didn't look at. Would you believe all weekend long I got pulled in so many directions? I never sat down in front of the computers more than say 20 minutes or something like that. So that is that's the whole situation there with the markets at this point. And you know what, 54, you should sell something against your position for a short period of time just for the decay. I'll try to work on that tonight. And so that's really where we're at this point. The markets are probably just waiting. As we go into the summer months, they're going to start the political stuff is going to start to pour into it, and the firmness in the markets probably is just that. I mean, between the Federal Reserve first, and then the markets know that the economy is going to keep on going. All right, there's crude, and you can see our work on it, and you can see how it's been going. Let's take a look at gold this morning and see what the contango is. Let's see. to answer this again. There we are. So there's 50. Let's see, 1756. Let's take a look at the futures contract and see what the contango looks like. Silver seems to be trying to put a foothold in, but we're not really seeing we're not seeing any real anything really screaming at us at the moment. I almost think that it wants to go into a weekly sell and then come back to the weekly buy. Honestly, I mean, silver's been really weird. You know, they took it down. It should. You would think it would be at $24 right now, but you know, it's maybe we're going to go up into the 20s. Maybe we'll finally break out of this and go after the I guess what we consider like the 50 percentile, the $25 area. And you can see here, gold is trading at 70, and so on the contango, let's see if we move this down just a little bit like that. You can see that. So it's a $14, almost a $15 contango now, and you know this thing fluctuates, you know, from anywhere from $2 to like $23 at any given week. There doesn't seem to be any real conviction there. And I did read an article this morning about the Federal Reserve not minting coins right now because of no use for them at the moment, but people are really reaching for the gold and the silver coins. Thank you very much, Doc. You are a true gentleman. I try. Yeah, we need to get you hedged for a few months before your decay eats it all up. And well, the good thing is you're short puts, so the decay on the puts is offsetting the call, so that's not bad. But it wouldn't be bad if you actually had a little bit more of a decay factor to protect. And so just in case, you know, we'll have to think about that harder. The more I think about it, you know, you got a synthetic long on, and so you're short the put and you're long the calls. They're both going to be decaying. You have the same dollar increment on both. So you should monitor that for a couple of days and see what the decay rate looks like. You know, are you making as much on the puts on the short side as you are the long calls? You know, that type of thing. Remember, it has a delta factor. So as it goes up, you know, you're losing money more because of well, in this case here, your long calls and your short puts. So you're making money on the delta, and it's hiding the decay factor. By the way, Doc, remember that there are no streams set to occur tomorrow and the day after tomorrow. Oh, really? Why is that? Is it a holiday? But I have been thinking that I could still set them up on my off days from home. Hey, I'd love that. Can you do that? And this way I can do the webinar. I would appreciate that. That would be really great. Yeah, if you can set it up from home, that'd be great. I appreciate that, Giannis. Oh, that's nice. Is it like an independence or some older holiday that that's been around for a few centuries, or something of that nature? I'll have to look it up. See what the Lafayette holiday is. National holiday. That's cool. Midsummer. I like that too. Yeah, if I can stream tomorrow, that would be great. I'd appreciate that. Pagan. Aren't we all? Aren't we all pagans in the end? So, yeah. Oh, I appreciate that. I just saw that across the Skype. Excellent. Thank you. So you can see here that contango is awful high. I think it's high. I mean, it should be like $2 or $1 at this point. Sweden did it last Saturday. Did they? Yeah. We did the same thing too. We had a big bonfire here. We had a nice cookout, but it was also Father's Day weekend here. A family holiday for the fathers. So yeah, that sounds nice. I like summer holidays. How did you see Siberia hit 100 degrees Fahrenheit? Uh, I guess that would be something like what is that, like 38 Celsius? And would you believe, in the area that it did it is where the North Pole has been drifting towards. You know, North Pole is about almost 1,000 miles off course now. It's in Siberia. The North Pole has moved almost 1,000 miles now, and it's in Siberia. And so the weather is moving along with it. Was it 38 Celsius? Yeah, that's pretty warm for Siberia, you know. Huh. That's interesting. Working days to exceed days off. Okay. Yeah. So what do I do? I just sign in again, like normal, and I'll just stream tomorrow, and then we'll do a title, and that'll be about it. I appreciate that. I guess that's about it. I mean, we can go through the rest of these numbers tomorrow, but as far as we can tell, the markets are being somewhat sanguine. I guess the best way to describe it, just kind of quiet and trying not to go anywhere. And I'm not sure if Powell is speaking again today. I don't think he's been speaking a lot lately. But then they had him doing testimony and all kinds of stuff. Excellent. I'll do them all as usual. Okay. Perfect. Perfect. All right. Well, I'm going to get back to trading. Markets are getting ready to open. So this is Doc from North America. We will talk to you tomorrow. And as we usually say, happy trails to you until we meet again.